Today we'll have with us a big expert in the market. I think Perfios has been one of the leading lights on the B2B side on with its multiple products and ideas. So we have here with us Ram Gopal Subramani, and we also have Shashank Shekhar, who is head of consulting for the Digital Fifth. So I think I'll quickly request maybe Ram to quickly introduce himself, and then we'll have Shashank quickly, and then we'll start with the session. I think, Shashank, you can quickly introduce yourself, and we'll then try to get Ram in.
Yeah, hello friends. Many of you guys may be knowing me. I will take care of the consulting here. But prior to that, I was working with the DCB Bank. I was 8 years there where I was taking care of the governance and compliance, then set up the IT infrastructure, and then also in managing digital banking. And as the last assignment, I was taking care of the setting of the open banking. Prior to DCB Bank, I was worked with Wipro and L&T Infotech, primarily into the security, compliance, and the technology services. Worked mostly in the BFSI segment in India and Middle East. And for the last 1.5 years with the Digital Fifth, primarily taking care of the consulting, working with fintechs, startups, and the BFSI customers on their digital and business strategy.
Yeah, and I think Ram is back with us. Ram, you there?
Hello everyone, I'm Ram Gopal. I go by Ram. I'm the Chief Operating Officer at Perfios, and I've been working with fintechs, NBFCs, and all the banks for several years. And also, last year we acquired a platform, Integrate, which is largely relevant for setting up new digital lending businesses. Over to you, Samir.
Yeah, and Ram has been a close friend, so I think we go long back. I think we would have met around 5-6 years back during DCB days. I remember first time when I heard about Perfios, I didn't know what it is, and since then I think the kind of growth they have seen is amazingly high. I think I've not met any lender who doesn't know them. So that's the kind of reach they have, and I'm sure today we will be able to use that knowledge a lot for our frameworks and support. So I think the idea for today's session is largely to set up a digital lending business. And what we are going to talk about is largely based on whatever skills and consulting we have done of late, or whatever we have set up in my previous days or Shashank has done. So we'll keep it from our firm perspective like that. And then of course, we'll take a lot of questions as we go forward, as we go towards the end. So with this, I hand it over to Shashank. You can quickly run past our initiatives, and then we'll go specifically in the agenda itself. Go ahead.
Yeah, thanks. And thanks, friend. Just a couple of minutes, I'll walk you through that what we do and what other activities are there, upcoming events, and that's all we just speak about, but not more than that. And after that, this will be pure on that session. So guys, welcome to our knowledge series that we have started from the last months, and this is like the third session on that. So as far as about us, the Digital Fifth, we are the first fintech and the digital consulting firm in India. Almost we have started 3 years back, and predominantly our focus on the consulting is more outcome driven and impact driven. So work with the fintech or the BFSI customer and see that how do we create an impact through our services. We predominantly work in the BFSI segment, be it across banks, the regulators, or we talk about the fintechs and the startups, NBFC. So those are the like primary segment we approach into. We comes with a 50 years experience between Samir, myself, Shrikant, and the young team that we have. And where that we differentiate primarily from our experience in the execution. Throughout that, we have been more like an executor. So we have been doing the implementation, be it in our role in the banks or be it in the role of the Infosys or the Wipro. We have always been defining and implementing. So that's the experience we are bringing, and we try to deploy it to all the other services that we do. Just quick overview on the services that primarily, if you can look at it, we divide our services into 3 components: the consulting, partnership, and the training. The consulting, we cater to all the areas like be it to talk about the business, where we help our customer to redefine the business strategy, realignment of the business roadmap, the plan, helping to the go-to-market strategy, go-to-the-market plan. On the fintechs, we largely work with all the fintechs, digital lending, payments. We talk about insurtech, wealthtech, helping them to define their business strategy, the go-to-the-market plan, helping them to set up the entire business, be it in the lending space, setting up the entire the technology platforms, define that entire MVP sprints plan, help them into the making of the go live of the technology platforms. We work extensively on the digital space also, where we help the customers to define their digital strategy, build the digital transformation plan, more into the do the deep dive review of the your business processes, re-engineering how the entire the automation can be done to digitize the entire processes. So that's where we bring the expertise to help our customers. And on the technology, we build the technology strategy, align with the business roadmap, do the benchmarking assessment. Benchmarking we do across all the in the business or the fintech or in the digitals, where we do the digital maturity model assessment or the technology maturity assessment, do the digital readiness. So all kind of the assessment and the roadmap definition that we work. We also do lots of work on the security and compliance with respect to either defining the security policy or procedures are concerned, or doing a deep dive review with respect to be it RBI circulars for the master circular for the NBFC on the technology space, or the account aggregator licensing framework that the RBI guidelines are there, or be it for the banks also on the be it on the Gopal Krishnan committee or the cyber security. So those are the areas that we try to help the fintechs and the BFSI customers. We work also on this being the founder or the playing the role of the CTO or the product manager or the chief digital officers, and work very closely with the founders or the management and help them in, as a more like a advisory services on the ongoing basis. So that's predominantly we do on the consulting. Partnership, where that we bring our expertise of the market connects, where we try to connect both the side of the world, be it the solution provider or the customers in the BFSI segment. And one of our marquee product has been on the FinTech Bazaar, where it's a one day speed dating kind of program, where we enable solution provider, be it on the startup side or be it on the platforms service provider, solution provider, and help them to connect with the customers on a one-on-one 15-20 minutes kind of the discussion, make a pitch, and try to take the discussion forwards. This has been probably highly successful, and we have been doing almost every 2 months we do that. So we'll just put some more details on the FinTech Bazaar in the upcoming sessions. We do also work very closely with the solution provider in the country, be it on the local startup, local solution provider, or the international solution provider, and helping them into the go to the market plan in country, where we take them, we define the leads for them, we define the business proposition for them, and help them into connect with the market. Same with the business relationship, where either somebody is looking as a lending partner or somebody is looking at the bank partner to do a collaboration for their business model. That's where that also we play the role into establishing the relationship. And many other times also we support fintechs on the investment side of it. The training is again our major business component, where we do both the B2C kind of program as well as the B2B kind of program. In B2C, we have been doing, for the last 3 years, we have been doing a 2 days extensive program on the digital banking, digital lending, the fintech transformation. Open banking, I think we would be the first or maybe the only one who may be doing the 2 days deep dive course on the open banking. So that's what we've been doing. And these are highly curated, market aligned, driven through the experts, covering on the entire digital lending part, deep from the how to set up the digital lending, what are the different models, what are the dynamics of these all the models, what kind of technologies go into setting up the digital model. So we go into the deep dive. So you can imagine about this sessions, the larger version of that. And then we do the curated programs. These are the quick overview of some of the customers that what we have done in across all the 3 segments, be it on the consulting, be it on the training and partnership. We do lots of programs for the colleges like NMIMS, SD Bocconi, IAM. We have done 2 days or 4 days kind of a program on the fintech courses. We work with very closely with NPCI, where we are helping them to set up the API accelerator platforms in the sandbox environment, where we help them to connect with the various API providers and bring them the platforms. And on the partnership, we have been working closely with Gleep, Credo Labs, where we help them to take into the market. So I will not take much of the time on this, but these are the just snapshot. Just quick on overview on our upcoming events. As we are talking about, our knowledge series. So that's we started at the last month. This is our third programs on that series on the digital lending. Next one is coming on to the how to build your credit underwriting process and what is the role of the data and AI to automate the entire credit process. Then we have a FinTech Bazaar coming on 5th of November and the certification programs on the digital lending and open banking. We spoke about the FinTech Bazaar, so that's the next one is coming on the 5th of November. And as I said, we have almost done 1,000 plus one-on-one meeting between the solution provider and the BFSI customer. And we have been almost 100 plus kind of the potential business has been taken, done in that kind of 15 minutes and then discussion taken forward and a deal has been executed. Just quick snapshot on the programs. So these are the kind of programs that we do on the open banking, digital banking, lending. I think we will also be one of the one who may be doing the deep course on the digital lending in the industry and purely aligned with the current market demand. And then open banking, also we do a kind of one-day program on the cyber security. And that's taking all the experience together. We are trying to comprehend and expand it to the overall into the 4 months comprehensive program, which may become ready to launch in somewhere in January, which will covering across all the dynamics of the digital and the fintech transformation. And the last, we are also venturing into the accelerator. We plan to pick up a few early stages of the startup with some criteria of having that MVP ready kind of products there, and work very closely with them, help them into the redesign, remap their product, business model, help them into connect the market access, provide the deep product knowledge on across all the areas, be it on the setting of the business, on their specific business model, the investment, all the kind of that help that we are trying to do that. And we should be launching this soon, and you will be through our LinkedIn handle, you will get to know more about our accelerator programs. So at this stage, so that's all about us. And now I'll hand over to Samir to take the discussion forward. And guys, we have put up our feedback form into chat. Just make a sincere request to whenever you get a chance, pick up the feedback form and give your feedback. That's helped into reshape our knowledge sessions that we plan to do subsequently. Thanks, Samir. Please.
Yeah, so let me just take control of this slide. So thanks, Ashok. I think what we will do now is primarily talk about how to exactly go about setting the business. Yeah, just one sec. Shashank, I'll try to control it, sorry. Yeah. So I think we'll talk about digital lending ecosystem, how it is structured. You may have already seen our sort of architecture and structure for some time. We have just rebaselined few more segments in the lending ecosystem. We'll talk about it, few new companies we've added to the ecosystem. Then we'll get into sort of how to set up the few steps of setting up a digital lending business. And I'll also share some pointers where I've seen a lot of lending frameworks going completely haywire because of lack of focus on collections, on other things. We'll talk about the practical pointers. They are not from some paper stuff, right? It's all practical. You won't see anything which is purely classical paper se nikal ke aaya and theory kind of stuff. That's what we will try to share. And then we'll seek help from Ram on the platform side. What should we do and how should we sort of buy out a product? So this is the lending ecosystem. Of course, it is a bit difficult to read, but what we've done is this has been there for some time. If you look at the bottom of it, we are largely talking about the banks and NBFCs who are now acting like a partner to fintechs and offering themselves as an engine for third party to use their lending framework. So in these cases, for example, a lending fintech can go to a bank and get the business up and running because capital will primarily come from these lenders. And fintechs will provide all the customer access, underwriting, and all of that basic framework. But obviously, decision making and all will be with the lender. So banks, many banks like RBL or lenders like Northern Arc and DCB and others and Arvok are largely trying to build this partnership model on the fintech side. So we have obviously not named all of them, but some of them we've named which we think are very relevant. And we have tried to segregate between retail and as well as SME lending ecosystem largely. And within consumer lending, if you look at it, there are a lot of new segments which have come up. We've seen growth, we have seen changes. So some of these changes we have tried to include in the framework. One interesting piece is that we've just started including the chit fund kind of framework which has come up. We have seen Kaipot and chipmunks being there already in the segment, and few more are right now getting built. So we believe that this segment will also sort of scale up with time. And then of course, from a lease perspective, we have seen Origa as well coming up. So there are new segments we have added. Feel free, we will anyway be sharing very, very shortly on the open framework. Of course, for building any kind of lending platform, you need to have access to the core platform, which is given on right. You need to have access to AML platform, underwriting platform as well. And collections platform. So this is largely if you are a lender and you want to build your business, you will be somewhere in this ecosystem, either using other partners, other platforms, or providing to these partners. So that's largely wanted to bring on board. In our training, obviously, we'll go much deeper into it. It's part of our framework of training, but the pointer I have is that use this as much as you want. We will be coming with a much deeper refresh of it as part of our training and maybe next month's communication as we go forward. Now let's come back to the how and what kind of issues you face in setting up your own lending business. I think I'll cover 1, 2, 3, 4, and then 5, and then onwards 6 onwards. It'll be Ram who will be guiding us. So let's look at from a lending business, right? So what happens is that there's still, and I'm just being very brutally honest about it, I think everybody talks about these proprietary databases and proprietary underwriting frameworks and all of that. In reality, nothing like that exists in 99% of the entities. Nothing like that. The rules and processes are very difficult to do. I'm talking about basic engineering. And when early stage startup says that I have a great AML platform and all of that, I think what they are, I think they are faking it till they're making it, right? So I'm still saying that don't fake it at least, but at least try to make some basic frameworks up and running before you do it. Even if you do an early stage rule-based framework, it'll be good for you. Absolutely good. Very few companies have got it right, and I can tell you that from my understanding from Patience guys, I think Prashant has been doing it fairly well, and few more companies have done a fair good job of it, and you can see the difference as well. In their underwriting and NPA and all of that, right? So don't copy paste. I keep telling them don't copy paste. Don't try to build a lending business for because others have it, you have to have it. I think you need to figure out what you want to do. I personally believe that all the lending which has happened on the corporate world has been largely on salaried class and this and that. A lot now movement has happening on SME side and self-employed and thin files and all of that. But what I also realized that most of the times people think that it's easy. And they go for the whole hog, right? Saying that I will be able to acquire customers in this segment, the same deck which will come that India has 6 crores or 6 million, 60 million, some data point where they will throw that this is the customer base we'll attack, we'll make billions out of it. And in reality, I think if you look at it, India has not had a single unicorn in lending business. And reason is primarily that we get aggressive, we get very happy about it, and people, founders start boasting that I have done 5 crores of lending in last 1 week, and all of that comes down to collection huani and pensions, right? So my view is that please pick up a smaller segment, very small segment, which you can cater to, meet the customer, understand the needs. And this is, I keep pushing all my customers saying that figure out karo, baat karo, talk to those guys. You will get a different insight than what you did. Unko need hogi lending ki, kyun zarurat hogi? Zarurat nahi hai ki, it's not necessary that they may have credit need, right? Understand for what purposes they are looking at. What product are you looking at? I mean, EMI kind of product was built primarily for, let's say, from a salary perspective, right? Salaried class. Now, what else is going to happen? Now we went to the POS-based framework. So we are saying daily deductions we do, but that is also valid for a specific segment. Can we have for some customer cash flow can be 5 days, next 23 days, and next 18 days, because that's the cash flow he has, right? You have to build products around that. And of course, on your side, you have to build very strong liquidity management framework. Otherwise, what will happen is that your capital will be under deployed and you will have a problem, not just of NPA, but with money getting locked and coming back at the wrong time. When you can't deploy, it comes back. So you need to be very cognizant about that structure as well. A lot of people do a very short-term lending, not realizing that if you do a short-term lending per month, if you do lending of and the cycle is just 30 days, you have to realize that if you lose 1% of NPA in every cycle, 100 rupees go down 99 rupees, it is not 1% NPA, it is 12% NPA because you have to accumulate for 12 months. So short-term lending can go haywire completely because the NPA chances are also higher because that many cycle it is going through. So being cognizant, I have seen some of them not really focus on it, saying that chota sa hi hai, thoda sa hi NPA hua, but it accumulates at very, very fast. You need to figure out how do you access to the customer. Do you have linkage to your usage? Do you know the usage of the loan? Try to see if you can find usage. Of course, it's not absolutely possible, but trying to figure out at least we can get some symptoms. Can we be part of the repayment process, or can we influence the customer in some way? And I know some of them have done a fabulous job of ensuring that there's a framework by which we can control the borrower and ensure that he is not paying. At least you can influence him to pay, rather than saying paisa nahi diya, we could not do connect with him, we could do nothing about it, he just vanished. All of that is difficult. Now let's come back to the slightly interesting part as well, it's basically the digital lending models. I think I'll keep it very short. I know that maybe I'll breach into otherwise Ram's time, maybe shorter version of it. So basically what we are saying is that any kind of lending is largely split into these 9 models: lead generation, customer experience, lending license. Whose license is this? Credit model, credit decision, capital, risk, loan process, and collections. Now you keep jumbling it, saying that in some cases fintech will do, in some cases banks will do some component, lenders will do some component. That kind of framework will come. So if you look at the pure marketplace stuff like Apna Paisa or Bank Bazaar, they does do the lead generation and then they partner with the lender. It can be a bank or fintech or whatever it is, and the customer experience to everything collections with them. The second model is primarily around partnership, like a Zest Money or Money Tap. These guys take care of entire customer experience. In many cases, they take care of even repayment collections, and they partner with the banks primarily for license. They don't have a license, they can partner with somebody with license. Credit model is jointly built because they have access to extra data, additional data, which is what banks value. Decision is always with the lender because that's how the RBI works. RBI does not allow a lender not to take a decision. They have to take a decision on the lending side. So that's what they do largely. And then of course, capital, whose capital is there is primarily the capital is of the lender. Of course, risk is, when I say risk is between a fintech and a bank, primarily is because there is a FLDG model. The default, if there is a default of let's say 3% or 5%, that defaults on the fintech. So that's how largely it is done. And I can keep going on and on. I'll keep it light there. There's also a co-lending model where you can actually have a risk sharing where the same loan is given across maybe between you and a lender as well. And you can have access to a different lower lending rate as well. And you must partner with others so that the lending rate can come down. There will be customers whom you can service at 30%. What if you want to service a customer at, let's say, 14% or 15%? You have to have access to a low-cost lender like a bank to service that. So that's what we say co-lending is critical. And of course, there are balance sheet lenders like a SME Corner or iFinance. They have enough capital and they go around doing it on their own. And a very complicated model, which is P2P lending, where funnily the credit decision, capital, and risk, all the 3 components are with the investors, whereas the collection and entire process is largely with the fintech. That's a P2B business model, which we have in the market. So normally I will say always figure out your source of funds, ensure they are there low. You can have your own capital, you can have somebody else's capital. We have seen enough startups or lenders stopping in between because they did not have access to the credit at that point of time. If you imagine if your business stops for 60 days or 90 days, you're still carrying the cost of your employees and all the lending framework. So please ensure that you have access to sort of funds all the time, because raw material itself is money. And you should not wait for only the equity to come in. You should have not just debt, but actually you should be able to source somebody else's books. And for that, you need to have good relationship with lenders, larger lenders with a lot of pool of funds as well. Customer acquisition channel, obviously, everybody thinks that their own app will attract people. Fact of the matter is it doesn't. And you have to burn the cash hell out of it. And instead of going too much deep into it, just leave it there. Please work on the API first approach. Figure out where the customer is, which kind of customer you can have access to, and work with them. Figure out a process and all of that. And that needs upfront investment in the framework. So which means that even if you have 50 crore book or 100 crores or 200 crores book, but this framework you have to apply upfront and ensure that your APIs are ready to integrate with third parties so that you can actually make it lighter. And then sort of as you scale, these costs will come down. So that's acquisition side channel has to be cheaper, and you should have closer tie-up with the ecosystem as such. That's what many guys are doing. Never forget your collection framework. Don't be boastful about the book size. Collections has killed a lot of people and a lot of egos of late as well. So just be careful. I'm not saying that I'm poking my nose in somebody's bad books. That's not the intent. It's just to ensure that you are aware of this. Excitement is something which has killed a lot of entities of late. I know I've met enough of them who have closed shop. So be aware of it. They were not at fault, but it's a risky business, right? So just being aware is obviously of good proportion. Of course, collection cycle, if you're part of it, if you can influence it, why not? And let's come back to the final point, which is the platform itself, right? If you have set up all of that, how do you identify the right platform, right frameworks and all? I think for these details, I will leave this to Ram, who is an expert in this business and knows about lending more than I think I would ever know. So with this, handing over to you, Ram.
Thanks a lot, Samir. I'm staying in control of the stream. So yeah, see, I think what Samir talked about, he tried to probably share a lot of knowledge in probably 15 minutes. Okay, and this is probably a 3 to 4 days kind of a deep dive workshop to really understand how to build a platform, lending business. Okay, so two parts to it, right? Why are you? So there are two characteristics of anyone who's setting up a lending business. One is you have to really understand risk. And second is you should definitely understand finance. Okay. And just like the way, see, in this whole lending, right? I think one thing Samir talked about, and which is also very important, is it is about largely about collaboration. Now, the collaboration can be at different forms. The collaboration can be in terms of acquiring customer. The collaboration could be in terms of who's financing it. Okay. Now collaboration. So these are your two parts of collaboration, right? So one is at a customer engagement layer, and the other is at the risk management layer. Okay, right? Now when you look at collaboration, right? Now collaboration requires orchestration. Okay. This is where your entire a loan origination, loan management system is kind of overloaded word, but then that is a platform which will bring about doing this collaboration. Traditionally, a lending was a straightforward relationship. Someone had enough capital, which is a bank, and then NBFCs came in, and then they had customers who they were acquiring directly in a physical world. Okay. And people had a lot of patience of building businesses over a period of time. I mean, like you look at ICICI Bank. ICICI Bank did not become a bank in 1 year or 2 years, right? It's probably a 25, 26 years journey. I mean, same with HFC Bank. Okay. So, like I said, understand. So risk, perseverance, patience comes into play. Okay. Now, just the fact that what are you setting up a digital lending business for? Are you an existing lender who is in a physical form and then you want to transform it to a digital form? Or are you a lender who's got a specialized space, right? So maybe in Pimpri Chinchwad, okay, you're dealing with all these manufacturing plants and then you want to provide them working capital. And then you have access to that customer base in a very captive manner. Okay. So which is, again, that's a partnership. Where you're going to acquire your customers. I mean, there will be very few Facebook, Google, geos in the world, right? So like all of us will be the long tail, and the long tail of lenders will be always very large, right? If you're the long tail, then managing the partnership becomes important. So moving to the next slide. Okay, so if I mean in the earlier slide, Samir had briefly covered onboarding, customer acquisition, onboarding, and then transitioning, disbursals, collection, and then your renewal, and obviously servicing. Okay, now in the same manner as a platform, right? Okay, and here let me see. We acquired the platform called as Fintech Labs, which is now rebranded as Integrate. Okay, one of the reasons why we acquired that platform is because we saw a lot of changing dynamics in the way lending is happening in the country. And not just in India. We are seeing this pattern in Southeast Asia, Middle East, and other countries. Okay. So I'm just going to quickly recap on the fact that there are at least 5 different forms of lending. A marketplace. Someone who's really good as a marketplace is someone who's got a large captive user base already. So you might be in a completely different business, but then you want to create a secondary line of revenue, which is by acting like a lead generator. So which means that you have qualified customers. As simple as this, banks became a lead generator for mutual fund and insurance payback, right? Now today e-commerce companies want to become a lead generator for lenders. Okay. Now if someone is starting off as just a marketplace by themselves, okay, without a captive user, you're spending huge on the captive. But then that's the first part. The second is a partnership where you either have partnership in acquisition or in risk or in the capital. The third one is co-lending, which is kind of a partnership but with a distributed ownership. Okay. And balance sheet is your pure play lender, okay, which can also be someone, again, he might do a partnership where he has the capital, but he doesn't want to acquire customers. Okay. And then P2P is inherently a different model of a multi-party transaction. Now, the changing relationship of lending, right, ecosystem is, it is going away from a borrower to a lender relationship to a multi-party orchestration. So you have a channel, acquisition channel. You have a, now the acquisition channel can, I mean, like you said, the risk channel is separate. Your, and you will get something like a P2P financing or invoice discounting or even let's say lease finance, right? Okay, Origa, which was there. Now here in P2P, you have a customer, you have a platform, and then you have an investor. Okay, now Integrate originated as a P2P platform because none of the LOS or LMS had the notion of a multi-party contract. So you always had a borrower and then you had the lending organization or the credit organization. Okay, correct? So which is where your invoice discounting is again multi-party and it's about it. So if we come to this part, right, depending on what is your business model, some of these elements may be relevant or may not be. Someone who is doing a full-fledged lending end-to-end, right, or even say someone like a P2P player, for them all these pieces apply. Okay, whereas for a marketplace, it might just be sourcing and onboarding. And then for your partnership, you will have sourcing, onboarding, underwriting, actually dispersal, servicing, collection, right? The only difference is for the dispersal, servicing and collection, there is an integration with a back-end bank or a NBFC, which is providing the capital, right? Now in underwriting could be their own model or they could be relying on the lender's model, okay, which again is integration. So inherently, the platform has changed significantly to be a partnership model. So that's why we talk about more. So you would be hearing a lot of it about API economics, okay, right? Which is where that comes into the part is you are going to, like, even for a collection, you may not do collection on your own, but you probably work with a digital agency, right? And then see, and probably the most important element which is left out, right, in a lending life cycle is the lifetime value of the customer. Are you just lending him once? So if your business model is to lend, let's say 10,000 rupees for 60 days to someone, if you're only lending once to him, first of all, your business will not really make sense or make money. Okay. And you don't have an LTV. So which means you need a repeat. And also some of the fintechs now are diversifying into other spaces. Someone has gone into gold loan, right? And someone is going into distribution in terms of mutual fund and equity. So, but largely think about how do you manage the ARPU of the customer, right? So it could be just beyond the loan, you might be selling him a card, you might be selling this thing. So which is important because how do you make money? Because at the end of the day, if you're setting your business, you're setting your business to make money for your investors, for your shareholders, for yourself. Okay. All right. Let's go on to the next slide. So again, now when we look at this part, right, your customer engagement really becomes important. Now the customer engagement can be direct, and when the customer engagement is direct, it could be a responsive web app, it could be a native app, it could be that you are integrating with, like you're basically sourcing through a digital lender, okay, or a fintech or a traditional DSA who wants to be digital. So he becomes your channel, right? Or if I look at this case of Origa, right? Origa is basically into lease, right? And they are, if I'm not mistaken, they are leasing equipments, right? Expensive equipments which people don't buy it, right? They want, instead of it being a capex, they want it to be an opex. Okay. Now, they may have their own channel partners. And today, for whatever reason, whatever is said and done, whether it is consumer or business, all of us want to have a lot more quicker response, right? We want better experience. So which is where even integrating your channel becomes important. And then workflow management becomes very important because workflow is in the way the platform is designed, right? Or the process is designed. You would need to have flexibility. So today you might start with the fact that you want to lend personal loan. So after some time you might say you want to lend business loan. Now on the business loan, you might want let's say some assessment to be done by a third party, or let's say the classic example is loan against property, right? So you have to have a valuation done. You want to verify the legal documents. So in that case, your workflow should be extendable and configurable. Then obviously important one is document collections. I mean, how do you collect all your information digitally? That's part of it. And so that is, so your onboarding journey is important. Okay. There can be multiple forms of onboarding. I mean, the latest one that we are envisaging is, can we pretty much create I know people are using WhatsApp for servicing, but can WhatsApp be used for origination? Can we have a conversational app built, right? Using a chatbot and this thing. Now, so there are different forms of origination and they'll keep changing, right? A platform should be able to be either extendable to plug it in, okay, right? And also based on, you should have a product which can pretty much be, you should be able to define the process flow for a product and also for a channel. If someone, let's say you have a fintech with whom you're partnering, they do all the onboarding, which means they collect the documents and all those things, they do the KYC, and then they're just sending you the information. Now, you can't have a rigid workflow. So, which means that is where it's important to have configuration. Okay. Now, traditional LOS platforms like, obviously they're also changing, but Nucleus, NewGen, SysArc, right, have a challenge there because they built it in a manner a long time back. It is not a Lego block. Okay. And you can't put in different pieces. You can't say that let me use an origination platform of Nucleus and let me use a LMS of a Finacle. It's obviously a thing, but I'm saying from a perspective. And the final part of it is, if you see there are different kinds of lending propositions, they are not just direct. There are multi-party this thing. So which is where does the platform allow you to have multiple actors, not just roles for an organization, right? So it is not that you have a salesperson, you have a CPA, you have a credit manager, you have a zonal head, you have a business head, and all those things. It's not roles. It is about distinct actors of collaboration. Like I said, again on the platform, integrate platform. See, these are, so basically your verification in terms of individual, identity, address, employment, if you're doing in salaried, and then you have, if it is business also, you would have a different set of verification. I know I've kind of missed out the business verification. I mean, like profession is covered, but business is not covered out. Again, basically both proprietorship, partnership, and private companies, right? So checking for the fact that the directors, okay, whether the company is doing its filing on time. So those also will come in terms of business verification. Credit assessment. Okay, this will be very, very different based on the product. How easily can you configure for your product what all is required? Now, if you're doing a partnership with, let's say, a company like HP or Oracle, okay, they're salaried. The salary is guaranteed, the employment is guaranteed. Okay. So and if you're doing something like equivalent of an FLDG, so your risk is also kind of minimized. Okay. So in that part, many of these processes may not even be required, or can be integration where the data is being provided by them. They have already captured the ID proof, address proof, all those things. Can they be passed? So which is where it comes into it. Then, so from a credit perspective, consumer segment has different kind of credit documents, which are bank statement, salary slip, income tax document. Your Form 16, Form 26 says ITRV. Then obviously for a professional, it is very similar, but then you also get Form 16A, right? Okay. For businesses, it is bank statement, tax statement, GST analysis, financial statement. Okay. Basically, because you want to look at the P&L and balance sheet, figure out how much of the fund is really required, how much of it is being same, right? Okay. And so then see, and also the part is a lot of people think about a loan as only origination. It is not just origination, it is a full life cycle, which means that after a loan is booked, you have the whole process of the loan servicing. You also have monitoring and collections. Okay. So those are important components. How do they fit in? Okay, I know. So this is I know I'm kind of running short of time. So let me quickly jump to the next slide. Again, like I said, as new business model comes in, it is important to look at the factors. Does it support multiple parties? And again, if you're doing FLDG, right? Or if you're a marketplace, do you want to reconcile how many of your applications got processed? Can you get a real-time view of what is the revenue that you generated? Okay, that is the efficiency. Okay, otherwise you will have a separate operations team which is just spending time on reconciliation. Okay, like I already talked about workflow management. And see, we all these things cover the product aspect of it, but more importantly on a platform aspect of it. Okay. Now, like Integrate, we actually have a very robust platform. We have high availability. I mean, even we have customers who are, we have different kind of customers, right? We have a customer who's just started off, who are doing two-wheeler loan, who do around 100 loans in a day, all in a SaaS model. But then a digital business means there is no, so which means you can't have failover. You can't have a system down for several hours. So it has to have high availability, right? Okay. But then at the same time, you should have an infrastructure which is optimized so that you're not incurring cost when you're idle, if your volumes are low. Like whatever in the first few, I mean, April, May, June, most people did not lend. I mean, some of the fintechs are still not lending. They're just doing collection. Okay. Now, in that case, what kind of infrastructure do they need to manage that part of it? So it has to be optimized. Security is very important. Security, both in terms of application security, information security. See, as a lender, if you are going to be lending on whether you are co-lending or whether you're doing a P2P invoice financing or you are lending on your own books, you are a regulated entity. Okay. Which means RBI you're falling under the ambit of RBI. Okay. And there are a whole aspect of security related to customers' data in terms of this. I mean, even in the application, you'll be asked is what kind of security mechanism is that? So the platform, from an information security perspective, which is a process, is the platform provider having all the kinds of checks and mechanisms from a process perspective. From a platform perspective, is that platform secure? What if someone comes and defaces your website? Okay. So which means, so what kind of security? So which is basically, it means that do you have things like security incident management tools, right? Data encryption, whole bunch of things. Then important is business continuity. If you're, let's say for whatever reason, I think Hyderabad was flooded 3-4 days ago. there was no power for 42 to 50 hours in many places. I don't know if there's any data center in Hyderabad, but if you're a business there and then you are not able to operate, so which means you need a secondary site, right? In the same manner, does the platform provider have enough mechanisms, BCP and disaster recovery implemented? Okay, finally, regulatory compliance. What kind of reportings are there? What is the mechanism? How convenient is it? See, when you're choosing a platform, you are primarily saying that I don't want to have the overheads of doing all these things. Okay, I want someone who's experienced enough and who can give me all these elements of a platform and which is scalable, right? You might start with a small number of applications, but you might scale. And as you scale, your complexity increases. Is the platform equipped for that one? Okay. And so those are things, again, I think, yeah, pretty much. Samir, back to you.
Good.
And just one last point before I finish all this part. See, as a business, you have to make investment, and also the fact is you can't start with the investment of investing on something small and then scaling or migrating. The cost of migration is very, very high. So just make sure that you consider the platform, and then more than happy to have conversations with on our platform integrate with you.
Thanks, Ram, for sharing a lot of insights on the platforms, and of course that's linked to your experience as well, all the while from framework perspective, maybe that the kind of account analyzer which everybody talks about, or what you've just sort of started working on. Now, I think, so one of the questions which I've just got, and this now, I think we wanted to close early so that we get a clean, maybe 20 minutes or 30 minutes to discuss, and we were open for discussions even beyond the 5 o'clock. So I'll start with the first one. I think Abhinash has asked a very basic question that will we share the deck as well? We will. Everybody who's going to share their feedback form, we will basically respond back to them with the deck as well. So everybody who is interested in this deck, please fill up your forms. We've shared the link to you, and all those who share these forms will sort of get these details email with this whole deck right away. So that we will plan for. Let's go with the questions which are there. I think and also be open to get direct questions as we go, right? So you can, I mean, we have, let's say 5, 6 questions or 8 questions already lined up. And we will ask it directly here. So with this, let me just open up the framework with Devashri. You have a question. Would you want to ask that right away yourself? That'll be maybe more interactive rather than just looking at us and yeah, getting bored by that. So Devashri, you want to ask this question, please?
Yeah, sure. So I just wanted to know, according to you, in your view, which is the most risky a business model, right? Lending model, and which is the least risky, and why?
I think I'll put it in a very different way. I think you should do business in which you know a fair bit of your domain. Therefore, everybody thought, and I can tell you that I have been part of banking for a very long time. Everybody had told that consumer durable business, the entire lending business which is done. I think if you would have asked this question 10 years back, everybody would have said that it's a dog business. You can never make money out of it. You've seen what Bajaj has done. So my pointer would be that you focus on the segment of your choice. I personally believe, and I've seen it, if you have good access to the customer base, you can influence the collection and the whole process. Building a 100 crore book, profitable book, is what should we target, rather than again looking at some random statistics and go for that. What do you say, J curve? I think in lending business, I would really urge people not to look at J curve. It's a normal process. Let the books be built slowly, and it can be anyone. I mean, even real estate, somebody can do a good job as long as they can actually manage the flow well and have access to the whole value chain. So that's one pointer. But generally, I would say stick to your skills. If you are very strong in tech and you have a fair understanding of the business, you start with one segment, let it scale in one segment. So I've seen a lot of guys getting into, I'm in retail, I'm in SME. In SME, I'm going to these 5 new products every month. We are doing it. You don't need, my request to all of them is that don't do a lot of innovation in this business, unnecessary innovation. You need to ensure that the cycle is well managed. Can you engage with these customers better? So any segment, I've seen every segment has good startups getting built in. but inherently you have to have strength in that domain. ऐसा नहीं हो सकता. What is not possible is that आज मैं इस सेगमेंट में जाता हूँ, कल मैं सैलरी क्लास में जाऊंगा, थर्ड में सेल्फ एम्प्लॉयड में जाऊंगा और वहां पे मैं अपना कुछ नया डालूंगा और प्रोडक्ट बदलता रहूंगा. आई थिंक दैट इज मोर फ्रॉम बीइंग पार्ट ऑफ द व्हाट यू से पेपर में आ जाते हैं. यू विल कम इन न्यूज़पेपर विद ऑल द न्यू इनोवेशंस यू आर डूइंग. You will burn yourself alive. I think every guy has done well. Every guy who has done well in the market has stuck to a single segment for a very long time. If very long time, it can be even 3 years, 4 years before they ventured into new segments because they have skilled this business. So every segment is decent enough as long as you have skills behind that and you know how to underwrite. Let me just imagine that gold business, Rupeek has done a fabulous job of it. But imagine how long they have stuck to that segment. And they have stuck so strong that everybody, when think about gold loan, they took to think about rupee, not other way around, right? They'll say rupee with the gold loan. There's nothing else they can think of. So stick to one is largely what you should do before you venture into other segments. That's what I've seen. Ram, any views from your side?
No, I think Samir, what you said is completely correct. See, another part is see what is the risk, right? As much of risk that you can understand and manage, the better you are. And so in lending, right, it is not about a 2-month cycle, right? You have to pretty much go through at least 2 cycles of lending before your model is kind of validated, and then you have repeatability. So that is important. So unlike the other businesses, I think lending business is something which requires a lot of time and a lot of patience. So in which case you also want to use your capital efficiently. And if you're diversifying into multiple products, that may not be the best option.
Yeah, thanks.
Thank you.
Yeah, thanks, Yoshi. So with this, we move to Shloka. Shloka, you go ahead and ask your question, please.
Thank you.
When you ask your question, please, if it will be great if you can put your video on and tell quickly about who you are before you ask the question. That will help us in all getting the framework as well.
Okay, sure. I'll just introduce myself. I'm sorry, I won't put my video on.
So थोड़ा आवाज तेज करोगे श्लोका? आवाज सुनाई नहीं दे रही.
Hello, can you hear me now?
Yes, lightly, but yeah.
Yeah. I'm a PM with Axis Bank.
Yeah.
And so my question was that are banks building any lead generation channels for partnering with fintechs? Any engagement in channels in which they expect to onboard fintechs, and then what's the rationale of that? Would they be looking to co-lend or something in that?
Whatever we have seen, I think a few banks have done it well. Most NBFCs, if you look at, let's say, Northern Arc or DMI have done it fabulously well, which is very deep integration. So I think as of now, every entity has the intent of with fintechs. The challenge has been largely that some of these platforms have not been as efficient. The legacy platforms have been not that efficient in integrating. APIs has been a challenge. So if you ask any lender, any fintech, they will think twice before they reach out to a bank because they know that the cycle is too long. I do know that very few banks, to some extent, I would say RBL has been able to solve to some extent these issues, but not too many banks have been able to do. I think my personal belief is that PSU banks and other banks and even NBFCs will solve this problem in next 2 to 3 years. This is what we are doing with our clients, right? So solving this problem, saying how do you build an API focused framework rather than my own app, my own front end. So yeah, every entity is right now looking at it. It's just that fintechs also tend to evaluate banks and saying or lenders and saying with whom they will work because of the complexity of their organization. Maybe for example, a lot of times compliance guys will not allow things to happen. Security guys will not allow permission. So this is very tricky one. Very few guys have been able to close it. So hopefully, I mean, like a bank like yours, if it opens door well on the lending side, I think it'll have a massive impact on the market.
But sorry, one follow-up to that. So the examples you gave, have they built something to generate leads for, say, underbanked customers? Have they built a marketplace or something like that, for in which and a fintech can plug into? So it's an inverse of what Udaan say. Udaan may Axis Bank would perhaps plug into or co-lend. So I'm suggesting the inverse now. Has that ever happened?
No, I think I know that one bank attempted it some time back where they had done their customer base. So for example, most of these guys will have financial inclusion as an initiative where they have relationship primarily on the liability side. But they're and maybe payment side, but they are not ready to expose themselves on the credit side. And one bank I know had gone in depth for partnering with other fintechs, lenders who are ready to take higher risks. I've not seen that scale up again on that side. So hopefully one of them will close it. So that's something we have been selling, that instead of taking leads from others, can you, since you are not offering to your own customers those loans, can you work with others? But I think it's a mentality issue, ownership issue as well in some minds. But over a period of time, it will get solved. Pointers very, very well understood that this need is there, and both the teams, I think the bank will make more money, the lender will be happier, and of course the customer will be happy because they finally have a source of funds as well.
Last follow up. Sorry, can you
Shloka,
share?
we have to move on. We will pick it up one on one if that's okay.
Thank you. Thank you.
I think I just want to ensure that everybody gets a chance to speak. So with
Amir, before we go, again, a sincere request for everyone to please fill up the feedback form, which is there in the chat window, and it will be really great help to us.
Yeah, in fact, as I said, we will share you the deck as well. If you share that, we will definitely share the deck back to you. So with this, we move to Ashish Murshete. Go ahead and ask your question, please. Ashish?
Yeah, hi. So my question is more with respect to money lending in rural India. So are there any fintechs, or how fintechs can replace the entire money lenders or this scenario in India?
I think I'll give you one perspective, and Ram, maybe you want to share your perspective.
Yeah, I think it will probably be the first part is some insider has to realize that
we lost you in between.
Sorry, I said the part is some insider in that industry has to say I want to become a platform and provide that part, which is where it is, right? Because in rural India, if you want to lend, what are you lending against? Farm income, not established. Okay, if you are doing an like a MFI, MFIs are already there, but then some of them are already on the platform and other parts, right? So if you're doing consumer lending, then the existing players are expanding this part, or even two-wheelers. Okay, I mean, you have players like KGMC, L&T Finance who are already expanding into those markets. So it will depend on the use case and how you plan to this thing. And again, from a money, if people are going to money lenders, right, their income is probably a challenge. So your payday loan players were, again, I mean, they still had a salary that they're targeting. So the segment becomes a risk element, and that is where the challenge is.
And maybe a very simple point from my side to you is that you have look at the cycle side, right? So they are buying seeds, they are delivering sort of to some mandis some material. There are a lot of guys working on are supplying milk as well. So if you can hold on to the value chain, you can do a lot of value and a lot of impact. And we've seen of late, a lot of entities have sort of come up in the rural ecosystem. And where sort of lending is happening. In fact, one of our customers, Stellups, has been very strong on milk-based lending. So they are in milk IoT business, and they are right now giving loans in villages, very, very small ticket loan against the milk that the people deliver there. I think these entities will come up because the lending is not the primary business. They already are intertwined with the customer, and they will partner with lenders to scale up this business. So that's what we see right now. And it will keep growing because it's a profitable business as long as you are in the value chain. I said you have to be in the chain. If you go and say I want to go to villages and lend, I think it will be very difficult. It will be better to have a framework in which you ride on top. Somebody's any which way they are procuring something and selling something. You be part of it. Sort of there's a higher chance you will be sort of successful as well. So with this, we move to Ganga Gupta. Ganga, please go ahead and ask your question, please.
So hi, very good evening, everyone. So I just wanted to understand, there are so many...
Ganga, can you give a quick background so that we know from where...
Sure. So I'm Gangar Gupta, founder and CEO of FinanceCart.com. FinanceCart is basically an AI-driven neutral marketplace for financial products matchmaking and provides access, choice, and control of financial services to the underserved and unserved MSMEs, as well as individuals.
Sure.
Yeah. So... we are incubated at IIM Lucknow as well as IIM Kasipur. So it's a very early stage startup. My question is, there are so many, lending business models across India, and we have not seen any unicorn which comes from the lending value chain. So what are the possible reasons, since you had, put out this point during your discussion? apart from that one, I would also like to understand, do you think that the marketplace lending is going to be the, you know, you know, that is going to be the uh, kind of business model which acquires a lot of customers and can be the next game changer in the, digital lending model, digital lending business?
I think I'll give it a very simple perspective. I think pure marketplace where you're only doing lead generation, I think I'm not I don't believe that that will become a unicorn business. Even if it does, maybe only one or two will ever become. It'll not be followed up by more. I think this business is more like winner takes all. Because of the capital which is required to create a lead generation. But if you're saying marketplace, more on deep integration with the lenders, where you do onboarding journeys, you do collections. I think there'll be a lot of few startups which will get there. I think I can clearly Zest Money kind of entities also entering this segment in next maybe I don't know how many year or 2 or 3. So I do believe that these segments will continue to grow with time. And you'll see, so these are the marketplace, but you need to be part of the journey. You can't say that I'll generate only lead and maybe I'll do 1 or 2 parts and I really can't add value. So if you're deeply integrated, then your value in the market will be higher. You also have a higher revenue share as well of the whole lending pricing, right? So overall, if let's say overall lending happens at 24%, you should have access to at least 5 to 6% or 7% out of it if you have good control and you help in end-to-end value chain without putting your own sort of equity on the table.
Right. Thank you. So the follow-up question, can I ask?
Ganga, we will take it offline. I think we
all
are.
All right. Thank you for the insight. Thanks.
So we have. I think we will step. I hope everybody is okay if we can continue for maybe 7 more minutes. There are a lot of questions here, and as I said, I think some more people are asking that how do we get access to this email, this presentation which we did today. As I said again, please. I think Malvika, can you share the feedback? I think some of these guys may not have got the form as well. So you just share the form as well, and they can give a feedback as well. So with this, we move to Sony. Sony, you had a question you want to ask?
Yeah. Hi, Samir. Hi, Ram. Great to see you guys back after a while. Yeah, great. I mean, I've been hearing this conversation, and I did hear Ram speak about nucleus, LMS, and all of that. So from a technology perspective, for any bank who is planning to invest in ramping up retail in a big manner, where are we right now? Because there are so many things that are happening from an API perspective, which actually opens up the onboarding story. But from the underwriting part and from the core part that the bank does, there is still not much of a difference from what it used to be earlier, except for the fact that there are new data elements that are coming in. So what should be the thought for a CIO in terms of investing in the right technology components for this journey, starting from the lead generation right up to collections? Is there anything that comes to your mind? I know it's a tough question, but then is there any answer for that?
Yeah, so I think see, the part is the first element is like you said, right? There's a lot of things on origination and onboarding. Okay, but what is important is from an experience perspective, right? You are pretty much building a very nice showroom, but then your service still remains the same. And you're actually setting the wrong expectation of a customer saying that I'm going to give you something instantaneously, because the subsequent processes are not tailored. So which means that what is really important from a distinct CIO and a bank perspective is to build a very good mid-office orchestration. Okay, which has to be largely that you're able to bring in a lot of flexibility in terms of configuration and rules. What I've seen is most platforms, I mean, like even large banks have BRE. Okay, but there are very few BREs which are configuration driven. Tomorrow, I mean, as simple as this, all banks NBFC scrambled when the moratorium was implemented, because no one had a notion of an interest rate of 0% or an interest holiday. Okay, I mean, that's the extreme case, but the fact is, if you want to create channels and then you want to create onboarding and then you want to create products to be lent, to be done faster, right? The entire chain has to be streamlined. So that is where I think it's important to look at mid-office orchestration and also look at a configuration-driven rule engine. Otherwise, you're ending up writing code, so which means, and from any perspective, IT bandwidth is always stretched. There are enough things which you're working on. And then it always happens that I want to get this thing small. And from a business perspective, it looks like a one-line change. But we know that in the legacy of a platform, right, it is never a one-line change. So I think that is where the change has to come in, both in terms of mid-office orchestration and a very powerful role engine.
Thank you.
Thanks, Sunny. There's a question from Bernard. Bernard, you want to ask your question?
Good morning, all. I'm Bernard Momu from Guinea.
Yeah, hi,
Guinea
Bernard.
is a West African country.
Yeah.
I have a question. We have a particular situation here. Don't know what advice or value added can you bring to the table for a microfinance institution that is trying to implement a digital lending solution in a context where there is no reliable address verification, nor a centralized credit bureau. The country does not have yet this infrastructure. I don't know if you can share any learning point or what you can do regarding this to have a macro lending, a digital lending solution in the market. Thank you.
Yeah, Bernard, I'll one perspective from what we've done in one location, which is in Myanmar. Very similar ecosystem there, where we're not much on the bureau side and not much on the digital footprint is not much. But funnily, they are very strong on Facebook and Viber. So that country is very different, very strong on at least the usage of social media. So there, what we have seen and what we have figured out is that maybe you cannot go to the full customer journey. You may not be able to do complete full customer journey online. But what you can do is you can do a sort of human touch involved. So there we had got more like a tab-based framework. But tab-based framework, which is deeply integrated backend on the underwriting engine and process. And you can certainly have, of course, your customer is there on the employee will be sort of extra cost there. But we've seen that framework giving a lot of value to us. And with complete backend doing sort of automation and underwriting getting automated in all the processes, you can actually somehow bring down the cost by even maybe 30, 40, 80% as well. And customer turnaround time can be brought down to even just a day or two. That's what we have seen in those markets. So I think even if you are not able to do whole thing end to end, I think it's not about full digital, and if it's never about full AIML. I think its answer is always somewhere in between. We should be able to find answer to that. I think, Bernard, we can have a chat on that. This is something which we are very strong in. We have worked somewhere, so we can talk about it for sure.
Okay, noted.
Thank you.
Get in touch.
Thank you. Maybe last one or two questions. Over to you, Sandeep. You had a question. Go ahead.
Yeah, hi. Thanks, Samir. So my specific question is to Ram. So primarily two questions. One, at what stage is India as compared to countries like China or US? That's one. Second thing is, in terms of the digital lending space, is there a data point that how many new to borrowing customers, be it retail or SME or whatever, has come into the digital lending, or it is mostly the digital lending is used as part of a process improvement to existing customers? So any data points out there?
Okay, so let me take the second one. See, I think in terms of new to credit, right? If you look at the data which is related to even the bureau data, okay, the bureau has seen a significant increase in new to credit customers. I think it's almost like threefold increase in the last 5 years in terms of the number of new entries being created. And so that would be a mechanism for us to anyway measure in terms of purely. And if I look at the the most successful product in digital lending has been your small ticket loan. So whether it is a small ticket loan for consumer, where you have players like Zest, Cashy, Early Salary, catering to, or it is a small ticket loan to a business, which is both your POS based and others like Indifi, Neo Growth, SME Corner, right, M Swipe, and some of the. I would say that these are markets which, given the pure nature of the economics, right, would not have been catered to by either a bank or an NBFC, other than being present in the consumer durable space. I think that is where would be the component. So I think there has been a lot of inclusion which has happened to these some of these days. On US and China, I mean, I have no idea on China. In US, I think it is again very similar to the fact that there are some places where there's a lot of, I mean, if you look at the US economy, right? So you have all the large banks, then you have the credit unions, then you have the savings and mortgage entities, this thing, right? So probably the fintech penetration in large banks is actually still very small. So what you have is you have certain companies like Rocket Mortgage and others in terms of your Fannie Mae kind of players and all those things who are on the mortgage side who have seen quite a bit of success. And then you have for new banking kind of players who have come in. Okay, it's a part of it. But your traditional equivalent of an NBFC, right? Your credit unions and savings and loan unions, these have not seen any penetration at all. So, which means from a technology perspective, I was actually very surprised to figure out that rural banks in the US don't even have a online presence.
So thanks a lot. So Ram, just one small question. So when you're saying as far as the new penetration in India is concerned, in terms of volume, is it as compared to traditional versus?
See, we'll get the part, right? The volume will be, so at least on our platform, right? I mean, we process around 3 million to 4 billion applications in a month. And okay, obviously in the last 6 months, the distribution has changed. It has become a lot more heavier on bank. But if I get between 2017 to 2020, right? Roughly around 45 to 50% used to be, I mean, in 1920 it was 45% from fintechs, right? Probably in 1819 it was 60% from fintechs. Okay. Now, in the last 2 years, banks and NBFCs have really caught up. So now there's a lot of now the volume is kind of getting distributed between as to 30% or one third among the three of them. And, but in terms, which is digital, right? But in terms of the new to credit segment, that still continues to be a space where fintechs and NBFCs are more dominant.
Okay. Thank you.
Thanks. So I think I know that we've gone way past 5, and I can see almost 70-80% of people are still sticking around. I'm assuming that Ram, you're okay if we can continue for a few more minutes.
Yeah, sure.
Okay. So I think we can have Darshan. We don't even know what you're going to ask, but it'll be good to have your question getting asked. Darshan, go ahead.
Thanks, Samir. And actually, a very specific question. For an app-based lender who is giving out a personal loan, is there any KYC required as per the law? As in, does the lender have to collect either the PAN number or the Aadhaar card of the person who's the recipient of the loan?
Let me try to answer. Answer is yes. Every lender needs to have follow the same regulation as any NBFC has to. So I think I can't go into specific of what it is, but they have to go to exactly the same level of requirement which any NBFC have. So if some of the lenders are not doing it, they're obviously taking their own set of risks. Otherwise, everybody has to follow the same rule. I don't think RBI will let city if you don't follow the rule.
So they have to take the PAN card and the Aadhaar number of the person getting the loan.
I'm not going to specific as I said, but okay. From RBI perspective, they are considered even if you have 1 rupee or 100,000 rupees. Yes, I know that some segments are still spared because of the logical reason they don't call themselves as lending. They call themselves as payment, and that's okay right now. Maybe everybody's okay with it. If you're getting into a lending business, you ought to follow the rules of RBI. As an NBFC, and 100% of them will be applicable to you.
All right, thank you.
Thank you. Maybe one or two more questions. Gayatri, you want to ask some question? Gayatri, I've seen something from your side. Gayatri? And in the meantime, please keep giving us feedback. As I said, we will share you the deck for today, and of course, send you more information as we go forward. Please share your feedback. The link is already there. The question is from I think you don't have her here. Maybe somebody else. Just let me see if there is anybody else. Okay, maybe I'll open the forum for any of the last one or two questions. Anybody want to ask any question? Go ahead and ask.
Hi, Samir. This is Sonali here. I did actually post a question. Good evening to everyone. I'm from Salesforce. Salesforce is a CRM solution that actually serves as an engagement platform for companies. My question is, do you think this is the right time for fintechs, NBFCs, banks to pivot to or move to a solution that is more of an ecosystem provider? If yes, would you suggest that this is a big bang approach or a specific process area or a system that they can take and revamp?
No, I think, Sonali, you need to be a bit more specific. Both ecosystem player, the sub-ecosystem player, everybody is an ecosystem player, right?
In the sense that, a solution that's not just serving as a loan origination solution, but also, let's say, an API platform that's able to connect with other fintech players, with even account aggregators and so on. So if you look at that vast, play that now a loan origination solution needs to provide, what should banks look at moving first or revamping first? Is it just their acquisition engine, or should it be their servicing, collections, or the entire platform as a big bang approach?
I think it is linked to the need of each bank. Typically, banks are very strong on the collection side on a generic basis. And you would have seen all the time, I think they're very conscious about it because they get hurt very fast on that side. And their investors are also focused on ensuring that NPAs, I mean, 0.5% of improvement in NPA and their valuation will go for a toss. I think they're very, very careful about it. So my view is that for early stage, these guys have to do enough of experimentation with the partners. Now, from API side, should they have first API only for partnership? Answer is yes. They have to ensure that at least they onboard the fintech partners with them. I think that's where the journey should start initially. And then, of course, you can, over a period of time, you can enrich it. Maybe you can also do, let's say, NBFCs can also get into co-lending frameworks. You should be open to integrate it with other data sources. And of course, the market is changing very fast. We are right now talking about new sources, which is account aggregators, one source. Or maybe now we are talking about anybody becoming OCEN. So, for example, the way we talk about it, India needs a National Lending Corporation of India, right? NLCI kind of framework where a single framework will come, which will ensure that on both sides, on one side, you'll have a lot of fintechs, on the other side, you have a lot of lenders, and you can have a full play out there. Or maybe OCEN framework, which talks about a single framework where the APIs will be, at least the framework's already called out that what API should do and what it will do, how it will go about doing it. But it does not have a single layer, which is just not one entity, but you should expose yourself as an OCEN API, your OCEN APIs, and so that you can partner with anybody who also supports that API. So I think these models you have to be very careful about. We also believe that in next 2 to 3 years, any of high risk lenders may go away. I doubt, and I really personally doubt, after when OCEN comes in place, or maybe NLCI comes in place, and you have standardization, somewhere I believe that we will lose out on that 35% IRR or 40% IRR. I think some of the lenders which are sitting on those rates will go away because these big lenders who have a low cost of capital will have access to these partners or who have access to these customers. So it's a mix and match. You have APIs, you have partners like a Udan or somebody else which is on the ground, or maybe a Pay Nearby or somebody else or Stellups who has access to customer. And with this marriage happening, you may not need a third party coming in between. So you may have a lender, a bank directly integrating with this platform and offering at a lower rate instead of they offering it to a NBFC and NBFC further giving to another small NBFC or fintech NBFC, and then it goes. So right now there are too many layers involved. Maybe 1 or 2 layers will come down with time.
Thank you.
Thank you. I think with this, we should close. I think almost 50 guys are still with us. So thank you for joining us. I think it was very interesting. And I know that we've still not answered lots of questions, absolutely lots of questions, because questions just kept on coming. So thank you for joining us. And we will have some sessions coming up. Next week, we have a session primarily on the usage of data for underwriting. So we'll have 2 experts coming from both data sources as well as for underwriting side. And then we'll obviously have a large course coming up primarily on the lending side. So I'm sure we'll get more and more chances to meet up. With this, thank you. And Shashank, thank you for sort of doing all the frameworks around that. Malvika, Shashank, Shrikant, everybody. And thank you, Ram, for helping us out with this. Thank you.